Yeah, good evening, guys. See, as we discussed, as we planned, let's start with MCQs. Okay, right. So these are all obviously very important for 30 marks of your question paper, correct? No? Consists of MCQs, right? So now, what is that we are going to do? As I told you, the way how I asked you to revise the subject, no, in the same manner you are supposed to go with. Yeah, so let's plan. That's what we planned exactly. That's how we will go ahead. Yeah, so um, yes, so now the question is, in days 10 events occurring after the balance sheet date. I think all of you must have one time revised it, right? So now the question, let me start. Let me explain you. Just I'll take some 2 to 3 minutes of time to revise the standard. After revision of the standard, then I will go to the MCQs. Okay, right. So first thing, Ind AS 10 talks about events occurring after the balance sheet date. Accounting standard, correct? Na? Accounting standard 10 and accounting standard 4 and Ind AS 10, there is no much difference, right? Point number one, right? And again, so here events occurring after the balance sheet date till what date? Till the board of directors, till the board of directors approval date, correct? No? Yes. So whatever the transaction happened, whatever the transaction means, that may be a favorable transaction or that may be unfavorable transaction. So under both the circumstances, you are supposed to correct if it is adjusting event or non-adjusting event. It is either favorable or unfavorable. You are supposed to divide into adjusting or non-adjusting. If it is adjusting event, then we will record it in the our year of financial year. If it is not adjusting, that is non-adjusting event, we will record it in the next financial year. Correct? So this is how it will go on. What is adjusting event? Adjusting event is a situation or condition which exists on 31st March, correct? And an event, correct? Now, subsequently, whatever happened, that is giving some information related to the situation or condition already 31st March. Got it? Yeah. So people, you should, mute yourself. That is more important, right? So, right. And if it is non-adjusting event means some information has come, but that information is nothing to do with the situation as on 31st March. So it is independent situation. Then it is called non-adjusting event. Correct. So are there any exceptions? Exception is one exception, which is like if the subsequent event, non-adjusting event is going to be affecting the, if subsequent event is affecting what? Going concern assumption. If it is affecting the going concern assumption, then obviously what are we supposed to do, my dear? Yes, it is supposed to be considered, even though it is a non-adjusting event, strictly speaking, but still it is supposed to be considered as if it is adjusting event. With respect to law, if there is law is telling that you are supposed to follow this, then you have to follow that. There is no specifically not mentioned in Ind AS 10, but it was there in accounting standard 4. Correct. Right. So, and in Ind AS 10, what is the extra point you have got? On which date the board of directors have approved the financial statement. That information is supposed to be given. Okay, right. And if it is a non-adjusting event, what are you supposed to do? If it is a non-adjusting event, you are supposed to, if it is a material transaction, yes, you are supposed to write the information in the notes to financial statements, not in the board of directors report. Okay, in the notes to financial statement, you are supposed to write it, but you don't need to, just a disclosure, it is not a recognition, right? This is the basic information. And one more important point is there, that is nothing but carve out compared to IFRS. So in IFRS, that is with respect to the loan, correct? Na? Right. So we'll see. Suppose if it was, it was already due. I'll explain you once again when some question comes up. That is better option. That's what I feel. If just like this theory, if a 2 minutes explanation, it won't work out. Right. Chalo, let's go ahead. And with after this discussion, whatever the question you have got, with respect to this standard, I'll clear it then and there. At the same time, next standard I am going to start with Ind AS 8. There also, if you have got any question, let me know. That also will clear it off. Right. So these questions with respect to MCQ questions, I have taken all the MCQs of ICAI first priority, and some more additional questions also we have included. I'll share you this question paper and this information I'll share you at later point of time. Okay, right. Just participate, but your participation should be in the messages. Obviously, you should be able to, you will be able to type. Fine, you please type. Correct. Now, whether it is right or wrong, whatever it is, we'll have a discussion on that. Yes, my dear. Chalo. Ind AS 10 events occurring after the balance sheet date. So let us start with the first bit. One second. Yeah. So the first one. On 15th January 2000, yes, on 15th January 2002, Alpha Limited filed a case suit against the Beta Limited. Okay, right. So for a recovery of 10 lakh rupees. So somebody filed a case, I mean Beta Limited. On 15th April, see the case is filed on 15th January. So as on 31st March, case is already there. So on 15th April 2002, the court case confirms that Beta Limited will have to pay the amount to Alpha Limited. So subsequently, the court's judgment also over, and it is saying that we are supposed to pay. Alright. So the financial statements are approved by the board on 20th May. So before the 20th May only this information has come. What will be the treatment of 10 lakh rupees in the financial statements of Beta on the reporting date, that is 31st March 2002, as per the Ind AS 10? Yes, my dear, what are we supposed to do? Shall we disclose as a contingent liability, or shall we recognize the provision for 10 lakh rupees, recognize a liability of 10 lakh rupees, or no treatment? What will you do? See, yeah, why not B? See, actually, there are some errors in the institute material also, right? Not a problem. See, I mean, C point is answer is correct, my dear. B also is correct. Yeah, it's like it's a provision estimation. Oh, fine, that is all fine. But at the end of the day, it cannot be like this. The provision is supposed to be made, right? I feel like B and C both are one and the same answers. Got it? Right. Anyhow, C is the information which is given by ICA also. Let's go with that. Right. I think this is very clear. It's already, they filed the case. The case was existing as on 31st March without any doubt. Right. Subsequently, information has come. That information has given a very clear information. That is that we are only liable. So then why are you not supposed to make a provision? You should make a provision for the same thing. Subsequently, when you make a payment, that you provision account debit to bank account, you are supposed to do it. Done? Clear. Right. Second question. According to Ind AS 10, when management of an entity is required to issue its financial statements to a supervisory board, yeah, supervisory board, let's say audit committee, let me say something like this. Okay, supervisory board word is given in the standard. IFRS mein, this is the word which is given. Audit committee, let me take an example. The financial statements are said to be approved when. So shall we say that is given to when the management of the entity is required to issue its financial statements to a supervisory board for issue, the financial statements are said to be approved when the shareholders approve this, or it is filed with the regulatory authority like MCA or SEBI or something, or approved by the supervisory board, or the management approve the financial statement to issue to the supervisory board. Tell me, which date are you supposed to take? Shareholders approval is the final approval, that is AGM. But approval by the board of directors, that is what the information we told. So Mahinder Reddy, that is not correct. Yes, what about others? See, A is not correct answer because shareholder approval is nothing but AGM, my dear. Correct, na? Management of the entity is required to issue its financial statement to a supervisory board for issue. First, board of directors will approve it, then we'll give it to the supervisory board. I hope you understood what I am trying to say. Correct, na? Yeah. So, what is right answer? When the management issues. Got my point? When the management in the sense here board is issuing to the audit committee. That itself is sufficient. Okay, that itself is sufficient. So, in the given case, the management approve the financial statements which are going to be issued to the supervisory board. So now situation, what is it telling? Board issued on one particular date. Supervisory board means audit committee meeting something. Audit committee when I am trying to say, Yeah, we are issuing in on particular date. Which date are you issuing? Let us say 15th May you are issuing, then 15th May board of directors approval date. So whatever the financial statements, I mean whatever the transaction happened till the 15th May you are supposed to consider. Okay, is it clear? Right, shall we go ahead? Yeah, if you need any clarity you can obviously unmute yourself and ask. Done. Chalo. Next, the management of a company decided and announced a plan to discontinue. Yeah, they have decided, not only decided, that they have done an announcement also. Okay, to the interested parties. Yeah, correct, discontinuing the operation. To liquidate the company also after the reporting date. Okay, after 31st March, you're liquidating also. Super. According to Ind AS 10, events occurring after the reporting period, the company shall. How are you supposed to prepare? Right? How are you supposed to prepare? With the going concern, without going concern, as on 31st March. They decided to discontinue the operation, liquidate the company after balance sheet date. So shall I consider? Yeah, tell me out of A, B, C, D, which one? See, first one says what? Prepare the financial statements on going concern basis. Is it true? Obviously not correct. Correct. Now we know, I mean, before signing the financial statement that there is no, I mean, there is no going concern assumption. Then you are not supposed to do it. Not prepare its financial statements on going concern assumption. That means no going concern assumption is here. Correct. Prepare the financial statements on going concern basis with disclosures. Correct. Now, as per Ind AS 1. No, you are saying prepare and going concern. So obviously it is not correct. Prepare the financial statements on going concern with no disclosure. Obviously not correct. As you people rightly said, B is the right answer. Okay, right. I think everybody has done this perfectly. So the fourth bit, the financial statements of Star Limited for the financial year 2001 and 2 or whatever 21-22, okay, were approved by the board of directors for issue on 24th May. The management discovered a major fraud and decided to reopen the books of account. Okay, not a problem. The financial statements were subsequently approved by the board on 31st May. What is the date of approval for issue as per the Ind AS 10? So you understood? First time they issued. Okay. I mean to the either to the audit committee to whatever it is. Subsequently, after they issued a first board meeting has happened, then they prepared the financial statements. Subsequently, they got to know there is some fraud. Then again they reopened, again they prepared it, and again they have given it on a subsequent date. Right. So now tell me what is the date you should take it now for our account Ind AS 10 purpose. For our Ind AS 10 purpose, which date are we going to consider? Which date are we going to consider? Is it 24th, that is first one, or is it 31st May, that is second date? Any of this? None of this. Right. Okay. People are answering BB. Fine. Obviously. End of the day, which financial statements are you supposed to take? Second round, whatever is completed. No, that is the that is the date you are supposed to consider. Okay. That is the only date you are supposed to consider. Right. Chalo. Let's go to the, yeah, you're right. Obviously not the first one, because this is not the financial statements which are issued. Finally, what is given, that is only first important thing. Yes. Next, Moon Limited, having issued a share capital of 15 lakh shares, decided to offer two options for divided per share option. Okay, two options. First option is what? 10 bottles of perfume. Fair market value is equal to, as per the bottle, is equal to 75 rupees. Okay. Option 2, dividend payment. This is dividend per share. Dividend payment of 700 rupees. Yeah, right. 700 rupees. The probability of the shareholders selecting non-cash, vice versa, cash option is entitled is 60 is to 40. So what is it trying to say? Non-cash option is equal to right, because obviously for about 10 bottles of perfume is equal to 10 into 75 is equal to 750. Here dividend of cash is equal to 700. So they are saying 60% chance is there for selection of the non-cash option. Obviously whichever is higher. Okay, done. So at the same time, okay, calculate the amount which dividend shall be initially recognized. later on, if on the date of settlement the fair market value of the bottle is equal to 90, okay, it went up further. Yeah, and accordingly ratio of the non-cash option is equal to 80 is to 20 it became. Then how much amount shall it be debited to equity? Means he's asking like how much should I recognize the, I mean there are two questions. First circumstance, how do I do it? Second circumstance, how do I do? See, non-cash consideration as a dividend, no? Point is right now, is it permitted by the law is not the question. Okay, don't interlink it with your accountancy, I mean FR with your law. Okay, that is a wrong option. So what are we supposed to do in the given case? Yeah, assume it is law is permitting. Now, what are we supposed to do? This is one part of appendix which I gave in the book. Have you guys read? I think I did not discuss it in the classroom. Yes. What is the fair value will come, my dear? For circumstance. Yeah. What do we do in this case? Right. Just a minute. Wait for a minute. I'll open the textbook. Then you will get an idea. Just give me a minute. Yeah. So this is the text discussion. Yeah. This is the appendix. I don't expect this is actually not permitted as per the Companies Act and etc. But anyhow, let's have a look at it. Right. Yes. So this is not discussed in the classroom. That I know very well. Yeah. What is this guidance is applicable when the entity distribution non-cash items like PPE or whatever it is, whatever non-cash item. So in the given circumstance, isn't it PPE? Not PPE, but it is a, some perfume, whatever it is, non-cash transaction. Yeah. So as I told you already, it is based on the assumption. Yes, it is based on the assumption. What is your assumption, my dear? Our assumption is correct, na? It is permitted by the law. It is permitted by law. Yeah. Don't discuss like whether permitted by law or not. That is not our discussion, first of all. Yeah. So what does it happen, my dear? When should the entity should recognize? What is the amount dividend payable to be measured? Yeah. Directly I will say yes. I'll directly let me go to the question number 2. How the dividend payable should be measured? Yeah, if only assets are distributed, fair value of the assets are supposed to be recognized as a dividend payable. That's it, straight. Fair market value, not the book value, not any other cost. If the option of assets and cash is given to the owner, yes, see, look at this is what related to my question. Case number B. Right, I hope you guys are following me. If the option of asset, yes, in my question, what is happening, my dear? Assets, I mean either perfume or the cash, whichever. Correct, na? Yeah. Dividend payable shall be estimated the fair value of the each alternative along with the associated probabilities. Okay, along with the associated probability. Right. So total dividend will be, I mean to say, what is that you say? 80 is to 20 when I say, yeah, fair market value of the perfume, yes, into your probability. Probability is equal to zero point 0.8. Example, I'm saying. Okay, fair value of the cash. Cash fair value is cash only, that's all. And what is the probability? That is equal to zero point 0.2. At the end of the reporting date, the entity shall review the carrying amount of the dividend payable and adjust the changes in the carrying amount of the payable and equity. Okay. How should the difference, like a third bit also very important to us. How should the difference on the settlement to be accounted for? See this? Correct. Na? I mean, initially you thought it is 80, 60 is to 40. Subsequently, it went by 60, 80 is to 20. Now, how are we supposed to deal such kind of circumstance? That is, carrying amount of the asset is equal to 10,000, followed cost model or something. Fair value is equal to 15,000, dividend paid, right? So, whatever it is, when the entity settles the dividend payable and any difference between the carrying amount of, correct, now you have recognized the dividend payable some number. Subsequently, you must have taken it. Subsequently, you must have given more or you must have given less. Some change can happen. So the carry that dividend payable should be recognized in the profit and loss account, not in the retained or not in the equity or something. It is going to be transferred to profit and loss statement, not to the retained earnings. Is this clear, my dear? Say answer at least yes, no, not applicable. Right? Shall we answer the question based on this? Right. Let us answer the question. Yes. Let me go to the. This is the fifth bit. Yes. So what is that happening? Do you have the calculator first? Yeah, help me out with the calculator. Yes, any one of you. 10 bottles of perfume, correct. That is equal to right now. What is the fair value? Right now, that is equal to 10 bottles means 750 rupees into 15 lakh rupees. And what is the proportion? What is the proportion is equal to 0.6. Get me the answer. First option. Second option is equal to what, my dear? Per head will get 700 rupees and 15 lakh shares go. One share will get 700 rupees. Correct now, 15 lakh share and the probability is equal to 0.4. Yeah, multiply and get me the answer. Yeah, and total this. Not carry. Are you guys able to do? Or shall I use Excel? No, total karo. Both together total. 750 and 1, 2, 3, 4, 15 lakh. Yes, and point 6. So this into this. That is coming to 67.5. First number. Yeah, 109.5. That's from first one. If you get to know, na, that itself is clearing. No, yes, your answer is 109. That is nothing but C. Your answer is perfectly all right. That's it. Next, second question also will answer. Obviously, first answer itself will tell that is clear. Correct, na? Second nowhere it is there. Yeah, but since it is a new concept which I did not explain you in the main class, at least let me clear it now. Yeah, what is it trying to tell? Next time there will be change. What is the change, my dear? 750 is the per head, correct? Na? No, not 750. Because now it has gone to bottle fair market value has gone to 90 rupees, isn't it? So 90 into 10 bottles. 90 into 10 bottles is equal to 900 rupees. 15 lakh bottles you are supposed to give it. And now the probability has become 0.8. That is the settlement. Agree? Right. So next cash is cash only. 700 and 15 lakh into now the probability has become 0.2. Yes, guys, I want this answer. Yeah, this number you already told me 19.100. 109.5. Now you let me know, please. What is the answer? Use your calculator. 129 crores. Okay, 129 crore rupees you got it. Now what is the difference, my dear? 129 minus 109. Yeah, difference this minus this. Your liability has gone up. Yeah, most probably that will be 19.5 only. Correct? Na? Yeah, because that is the situation. Exactly. So this amount should be transferred to where, my dear? This amount should be transferred to profit and loss statement. Agree? Perfectly all right. Now let's go to the sixth one. Yeah, a company XYZ took a long-term loan from a bank. Okay, done. Before the end of the before the end of the reporting date, there is a breach. Before the end of the date, I mean before the end of the reporting date. That means as on 31st March, there is already a breach in the terms which are material for this loan. Okay, so there is a breach of contract. So the amount stands payable on demand by the company to the banker. That means, strictly speaking, on 31st March, it is a current liability. You are supposed to repay. Correct. But after the reporting date, before the approval of the financial statements for the issue, company entered into an agreement with the banker, pursuant to which loan is not payable on demand right now. So subsequently, they have entered into agreement. Correctly speaking, this is nothing. This is a new transaction, new arrangement they have entered. This arrangement was not there as on 31st March. Correct na? Strictly speaking, it is supposed to be a current liability and non-adjusting event, but there is a carve out in this regard. Correct na? Since there is a carve out, I hope you understood. Since there is a carve out, what are we supposed to do? Even though it is a current liability, it should be considered as non-current liability. Correct na? Even though strictly speaking it is a non-adjusting event, but should be considered as adjusting event because of the carve out. Because of the carve out. Got it? Exactly. Yeah. So this loan should be treated as adjusting or non-adjusting. Obviously, you are supposed to treat it as adjusting event. Okay, that is what we have already discussed in the class also. Next, what is the date of approval for issue of the financial statements? Seventh bit I am going. What is the date of approval for issue of financial statements prepared for the reporting period from 1st April 2001 to 31st March 2002 in situation where following dates are available? In situation where the following dates are available. Tell me, my dear, what is the date of approval for issue of the financial statements prepared 1st April to 31st March? Which are the date you should consider? Yeah, B. Board reviews and approves. That's all. Available to shareholder. Why do I bother? Completion of preparation of financial statement. I don't care. Filed with MCA. Where did it say? Correct. Now, obviously, board is approval. This is straight and simple question. Right. Next. On 15th April, let's go to the 8th bit. On 15th April, a major earthquake disrupted 15th April, which is subsequent event. The entire operations of the reputed company were obviously disrupted. The company suffered huge loss due to the damage caused to its factories and other business premises. The company insurance policy does not cover this. That means paisa bhi nahi aayega. Arising from the natural disaster. The company does not have a sufficient internal funds to availability something something. Okay, the board of the company is also not sure whether what to do. Correct na? So tell me guys, why should I discuss so much? Right, is it adjusting event or non-adjusting event? This is discussed in the classroom also. Adjusting or non-adjusting? Strictly speaking, it is a non-adjusting. Correct na? But right, strictly speaking non-adjusting because it is happening after 31st March, but this is an exception which is given in the standard. I told you in the summarized time also, I told you this is nothing but adjusted financial statements or only it is an adjusting event. Correct, not just disclosure, my dear. Nothing required is also wrong. On the discretion, nothing is discretion. If this is yes side, this side, A side, not up to you actually. So that is A, which is adjusting event without doubt. Right. Ninth bit. Event after the reporting period are those events that occur between the end of the reporting date and which date? Which date in the sense? Board of Directors approve. Correct? Now approval of financial statement by the Board of Directors. Silly and straight question. Okay. The objective of Ind AS 10 is to prescribe. Tell me, very simple. What is it to prescribe? The disclosure that the entity should give about the date when the financial statements were approved by the further issue. I told you sometime. This is not there in accounting standard 4. This is there here. When is it getting correct now? When is it getting approved? Yes, that is this information you are supposed to disclose it. Disclosure about the events of after the reporting date. Yes, right. None of the above. No, right. So that's why. What is the correct answer, my dear? D, because it is talking about both the circumstances. Perfect. Yes, you also answered correctly. Events after the reporting date are those events which are which are what I told you just now. I told you whether it is favorable or unfavorable. Everything is supposed to be considered. It is nothing like only unfavorable transactions should be considered. There is nothing like that. Correct, na? Right. Let's get into the 12th bit. Yeah, what does 12th bit says? Events after the reporting date are those events that occur between the end of the. This is a repetition again. Correct, na? This is a repetition when the financial statements approved. According to Ind AS, correct, na? According to Ind AS 10, what kind of events can be identified? Yeah, what kind of events can be identified? Tell me, my dear. You read the ABCD options and answer me. Those that provide evidence of condition that existed at the end of the balance sheet date, those the indicators of conditions that arose after the balance sheet period, both of the above or none of the above. hmm? A or C? One guy is saying A, one guy is saying B. C. See, read the sentence carefully. Yes, another person also voting for C. Yeah, those that provide evidence of conditions existed. Yes, condition is there already on 31st March. And those are indicative of conditions that arose after. Yeah, there is some events which are happening after, but which is indicating about the condition. Condition was there as on 31st March. If you remember, I gave you an example of, correct na? I got to know because of the subsequent event. I got to know I was already liable as on 31st March. If you remember, I was not aware, but I thought I was not aware with respect to legal case. I thought I will win. That's why I did not make a provision. But subsequently, based on the judgment, I got to know I am going to correct. I am only liable to the same situation. So yes, the C bit is correct, my dear. Both the things are nothing but C is going to be correct thing. Okay, right. And the 14th bit. A company XYZ took a long-term loan basis. Before the end of the reporting date, there is a breach in the terms of the material in the loan. The amounts stand payable on demand by the company after the reporting date, but before the approval of the financial statement, the company got into an agreement. I think this is the same repetition again. This is repeated. Yes. So I'm also solving along with you. That's the reason. Right. So 15th. According to Ind AS 10, when management of the entity is required to issue the financial statement to a supervisory board for issue, this is also repeated. I'm sorry, guys. So I will be deleting all these things when I give it to you. Right. So which is approved by correct. This is same bit D. What is the date of approval for issue of the financial statements prepared between this? Sorry, same thing. This is a small standard. You can't expect too many kind of questions. Correct, no? Yeah. 1 second. Yeah. So let's start the 17th sum now. So on 15th January 2022, okay, A Limited filed a suit against B Limited for recovery of 10 lakhs rupees. Right. On 15th May, the court case confirms that B has to pay the same. I think correct. Not same. This is also. I'm sorry. Repeat. Yes. B Limited. B Limited is a listed company. Is preparing the financial statements for the quarter ending September 2022. Yeah, this is from the point view of the quarterly financial statements. Okay, quarterly financial statements. Right. So when I say quarterly financial statements, the listed company is preparing the financial statement for the quarter ending, right, September 2022 for the purpose of to filing with the BSE in accordance with the regulations of 33 of the SEBI. This is all fine. The board meeting for the approval of unaudited financial statements was held on 10th November. An error in the accounting software was detected on 31st October, which resulted in under reporting of income by 2 crore rupees for the quarter ending September 2022. What will be the treatment of this event? Yeah. So yes, look at the answers and answer. You try answering. What should we do? The board meeting has happened means 10th approval books of accounts are, I mean 10th November, sorry. Yeah, 10th of September. See the dates carefully. quarter ending is 3rd September, that is 30th September. Okay, yeah, quarter ending 30th September, this is balance sheet date. Whether, see, rule is rule whether it is for the year end financial statement or whether it is the quarterly financial statement, you don't need to bother about it. Okay, right. So that is the first point. So quarter ending, that is September 2022, the purpose of the filing, that's fine. The board meeting for the approval has happened, was held on 10th November. Okay, 10th November, yeah, 10th November, that is 2022, whatever the date. An error in the financial statements was detected on 31st October. So 31st October means that is before the date. When the resulted in under reporting, okay, that is reducing, I mean under reported of 2 crore rupees of whatever that is, right? What will be the treatment of? So have you got to know that? You got to know before information has been sorry, before approval of the financial statements by the board or not? Have you got to know? Is it after you got to know or before you got to know? Obviously before only you got to know. Yes. So now tell me, what are we supposed to do? Is it adjusting or not? Hmm? Is it adjusting or not? Yes. Say if it is error is pertaining to the, that is the 6 months time. The 6 months in the sense from 1/4 to 30th 9. I'm preparing the quarter for this year. Yeah, I got to know the error here. But if that error is pertaining to last, correct na? So error is in the accounting was detected on 31st October, which was resulted into 2 crore rupees of lesser income or more income, whatever it is. Correct na? So rectification of error in the period in which it was detected. What is he trying to say? You record it in the October month, he is saying. Right. Rectification of error, that is error which is pertaining to. Suppose if it is pertaining to 6 months, I mean first 6 months, then it is supposed to go to the first 6 months period. Yes, obviously. Disclosure of error in the quarterly financial statement because these were unaudited. Disclosure only he is saying, nothing doing. It is supposed to be accounted for. Okay, no effect in the quarterly financial statement because these are unaudited. This answer is not correct. Whether it is unaudited or audited, correct. Now the question, E 2 crore rupees of error as because of the software, it is pertaining to which period? In that period, you should accounting for. It's an error. Fraud includes an error. That is as per Ind AS 8. If you remember the definition of error when I was telling, error includes a fraud. So if it is in case of error, as per Ind AS 8, what are we supposed to do? Retrospective restatement is supposed to happen. What do you mean by retrospective restatement? Yes, as if the error did not happen. So that means first, what is your job? I should identify the error is pertaining to which period. The error is pertaining to first 6 months, then this 30th, whatever the quarterly ended financial statements you are preparing, it is supposed to be adjusted in that financial year. That financial statement itself will be adjusted. No. Error is pertaining to October month, not related to September or before September. Then if it is pertaining to October month, it should be accounted for in pertaining. I mean that is October itself. Then it is non-adjusting event. Anyhow, the question is they are not asking adjusting or non-adjusting because they only have not given the clarity whether the error is pertaining to which period. They have not told me. Correct, na? So that is why. So my answer is going to be the B. Correct, na? Rectification of error. It is pertaining to which period you are supposed to go and rectify. Is this clear to you? Yes or no? Yeah. So the next question. Yeah. So according to Ind AS 10, what will be the treatment of the dividend declared after the reporting date but before the financial statements are approved for the issue? Tell me, man, after 31st March they have declared the dividend. Do you consider this as a liability? Hmm? Will never consider. Correct. Now, is it adjusting or non adjusting? I was not liable to pay the dividend because it is proposed or it is declared after 31st March, then it is supposed to be recognized. Recognized in the sense as a reduction from the equity, that is supposed to be recognized only in the next financial year but not in the financial year. This is a disclosure. Yes, it is a disclosure, obviously. Yes, as per the schedule 3 also, this is a disclosure. It is a non-adjusting event, but it is important to the users. That's why this is a disclosure as per the Ind AS as well. Recognized as a liability in the balance sheet date, which is wrong. Recognize as a provision liability, provision whatever it is. Recognize as a liability if the dividend is paid before the financial statements are approved by this. There is no such new concept. Okay, it is a disclosure in the notes to financial statements. That's it. So 20th, discovery correct. Discovery of fraud or error after the financial statements are approved for issue, but before it is approved by the stakeholders need to be. What should I do? You got to know fraud or error after the financial statements are approved. Financial statements are approved for issue, but before the approval of the shareholders meeting. Hmm. Answer A, B, C, D. Do you adjust in the financial statement? Means adjustment. First of all, after board of directors approval, before the AGM, he's trying to tell. Then it won't come under the scope of Ind AS 10. Correct? Na? Is it a disclosure in the financial statement? Kaisa hota hai? Already financial statement itself is done. Right. Adjusted in the financial statement if impact of the fraud is certain. So what is this? There is no such rule. Right. Obviously, correct na. So the 20th question ka answer is going to be right. C, none of the above. Right. It is outside the scope. You can, I mean, we can write like it is out of scope of Ind AS 10. It is out of scope of Ind AS 10. Out of Ind AS 10 will be covering only till the events occurring after the balance sheet date, means from the balance sheet date to the board of directors approval of financial statement, not later, obviously. Right. Let's look at the next 21st question. The management of the company decides and announce a plan to discontinue the operations of liquidation. This is all already. This is again repeated question. Okay, right. We already discussed this. Yeah, there are some issues obviously. The financial statements of, yes. Please look at the financial statements of B Limited for the financial year. Power gone. Yeah. Is it audible? Yeah, let's reread it again. The financial statements of B Limited for the financial year 2021-22 were approved by the board for issue on 24th May. Okay, done. The management discovered a major fraud, decided to reopen the books of account, and financial statement was subsequently approved by the board of that. Same question, no? Again, this is repeated. Yeah, next time I'll try to ensure that there will not be such kind of repeated questions. Okay. B Limited having issued share capital. This is again, I'm sorry, repeat. Yeah. So B Limited finalization of process. Yes, something COVID, something they are writing. Then let's read it. On 1st July 2022, B Limited is in the process of finalization of its financial statement for the year ended 31st March 2022. Okay, due to second wave of COVID, they had faced a major downfall in the revenue cash crisis for the period. Then, okay, ended. However, the management anticipates growth in the future and is in talks with the potential investor for additional funding. Okay, done. The investors are keen in B Limited and management expects to close the deal by quarter 2, that is 2020-23, next financial year. On the other hand, another company C Limited having the same business model and similar impact due to COVID-19 pandemic has prepared the financial statements on liquidation basis. That means without going concern assumption. Okay, fine. So, so now what are we supposed to do, my dear? Right. So, what shall be the correct impact of this situation on the financial statements of the B company as per the Ind AS 10? So, tell me what should we do? You understood the question? I mean, they were in talks with the investor, like they are in the crisis. Understood? They were in talks with the investor. The investor is going to close the deal, means they will invest it in 2020-23. And so, what are we supposed to do? But in the meanwhile, what is he given? He has given another company ka information, which is C Limited. In the C Limited situation, what is happening? That company has prepared on liquidation basis. That is assuming that there is no going concern assumption. Okay, there is no going concern assumption. That is what the stand they have taken. So now, how are we supposed to prepare in the company of initial company, which is B Limited? So what do you say now? Yeah. BG will prepare the financial statements on liquidation basis, or no alteration to be needed to the financial statements of B, whatever. Okay. B will continue to prepare the financial statements on going concern basis. However, proper disclosure shall be given in the impact of second wave and its migration plan. Either B or C. What is your answer? Okay. Somebody has given either B or C. Hmm? Yes. Any other response? See, this is with respect to little bit of auditing. This is little bit of, accounting standard. Accounting standard may what does it says? Is there a is there a doubt, significant doubt on the going concern assumption? If there significant, if there is no going concern assumption, then you are supposed to consider this as an adjusting event, and you are supposed to prepare the financial statements on right at book value, carrying amount or NRV, whichever is lower, and any gain or loss. That means nothing but preparation on liquidation basis. That is the basic concept. So now the question here, some other company situation, correct? Now some other company situation, he gave it and tried to confuse us basically. Yeah, similar impact due to COVID-19 has come. Correct. Impact must have been there, my dear. But in my company, there is a potential investor. Correct. Now, they liked my company. They're very keen. See the first one, two, three, four, five, fifth line. Mein dekho, the investors are keen in B Limited. And the management is expected to close the deal by quarter 2, 2022. I mean, before September, they are trying to close it. Right? Yeah. So before September, they are trying to close it. I feel first, you can, this is a very difficult answer to the straight away. So yes or no karke nobody can answer, but still you can, if you have a comfort that these guys are going to give money for sure or something like that, then go ahead with the preparation of going concern basis. But yes, proper disclosure you are supposed to provide. Right. I will go with C answer rather than D answer. Okay, I hope my explanation is fine. Right, you don't need to be confused with the information of another company. This is the area where they are trying to confuse you. Why do you bother about it? Other company has happened, but doesn't mean that whatever is happening to some company doesn't mean that it will happen to my company also, na? Why should it happen? I already found one investor. They are also very keen into invest. That is what, as per the words they have given it. So that's why I'll go with C rather than D. Okay. All right, Prakash, I hope you agree with me. Right. 25th question. So in the case of, yeah, a case is going on between XY company and the GST department and claiming some exemption for the 2021-22 financial year. Okay. The court has issued an order on 15th April, rejected the claim of the company. Accordingly, the company is liable to pay the additional tax. The financial statements of the company 2000 had been approved by 15th May. Okay, that means 15th May before only judgment also has come. When should, correct now, when should the company account for this such tax provision? Yes, tell me, my dear. This you can say very clearly. When should we account for such thing? When should we account for such thing? Hmm. To be recognized in the last year, that is 2021, 21, sorry, 21-22, or it will be recognized in the next year, that is non-adjusting event, right? Not to be recognized. Okay, that is a different answer. It shall be disclosure. Disclosure is sufficient. Is it? See, this a case is going on. Correct, na? With respect to exemption, it was there. Case is not a new case altogether. 21-22 itself, it was there. Subsequently, you got to know that it was rejected. My exemption was rejected. I only supposed to end up paying. So it's a very clear-cut answer. That is nothing but A is the right answer. Right. 26th one. XY Limited, XY declares a dividend of 25th July. Okay. 25th July, we are declaring a dividend. As a result of financial 21-22 were better expected. Okay. 25th July, you declared. Not a problem. Right. The financial statements of the company approved on 25th July. Fine, same date. For the financial year ending 31st March, in the same board meeting, what will be the treatment of such a dividend in light with the provisions of Ind AS 10? Tell me, my dear, shall I record it in 2021-22 na or next financial year? Which one are you supposed to? Which one is your answer? Which one is your answer? Yeah, to be recognized in 21-22. No way. Yeah, it's B actually. Correct. Now it is declared in which date? 25th July. Correct. Now when it is declared in 25th July, obviously, yes, that is 2022-23 financial year only applicable. So B is the right answer. Okay, perfect. Now 27th question. During the year 2013, ABC Limited was sued by the competitor for 15 million for infringement of the trademark. Okay, they used the trademark misusing. Based on the advice of the company's legal counsel, ABC accrued the sum of 10 million as a provision. Already they wrote the journal entry for, I mean, they made a provision for 10 million rupees provision kar diya in the December itself. Okay, that is year actually. Observe it. This is year 2013 means that is nothing but 2030 calendar year. Yeah, calendar year is to obviously, as you know, that is December. So that's why we are talking about December 1. Huh. So subsequent to the data before, subsequent to the, I mean, February means after 31st December. Okay, Supreme Court of the country decided in favor of the party challenging the infringement trademark. That means you lost the case. And they're asking us to pay aggrieved payment of 14 million rupees. Their claim is court has said nothing to you, not 10 million man. You just shut up and pay 14 million. The financial statements were prepared by the company management on January 31st. Okay, judgment has come on which date, my dear? February 15th judgment has come. The financial statements were prepared by the company management is 31st January itself. And approved by the board is February 20th. That is after the judgment. Done. So how much adjustment that should be made in the financial statements? Tell me, my dear. Shall we increase the provision by 4 million or decrease it by 4 million? Nothing, no adjustment, no disclosure. Kuch nahi. Answer quickly. What do you do? You thought it was the provision was 10 million was sufficient as per the legal counsel. Legal counsel is nothing but as per your lawyer. Yeah, but subsequently you got to know court has decided that it is not 10 million, my dear, it is 14 million. Correct, na? Yes, the subsequent judgment made you to clear that yes, you are supposed to. It was supposed to be 14 million. Correct, na? So now what are we supposed to do? Obviously, you are supposed to increase it. Correct, na? What are we supposed to do? Yes, answer is obviously you have to increase them. Correct, the same thing. I think I explained it with an example of power bill. Karke one example I gave you in the class. Correct. Now you thought the 2 lakh rupees or 3 lakh rupees was the power bill. Subsequently, it became 3 lakh 75 something. Some number I kept it if I remember correctly. Yes, you are supposed to increase it by 4 million rupees. Hope you understood. Correct, na? I think is that will be sufficient. In the next standard, I mean, when I'm taking it up, I'll try to ensure that these errors, I mean, repetition questions, I will be deleting and I'll come out with the final things. Fine.